Hello traders and welcome to another video analysis. Today is Friday the 16th of October 2020 and we are going to take a look at the Forex calendar to see what are the most important events for today, and then of course we are going to do the review of the previous pairs that I have been analyzing for all of this week. So let's just dive into the Forex market. Let's see what we have on Friday. What's important? This is Thursday and the last one is the Friday. Do we have any important events? It looks like we got the consumer price index data to be released at 11 o'clock. The previous reading was minus 0.3%, the forecast minus 0.3%, so no inflationary pressure on a euro area as well. The core consumer price index is 0.2% and the forecast is as well 0.2%, so no pressure here. Some data from the United States, most of them is about to be released. One of them is retail sales, scheduled for release at 2:30, and as you can see, it has a high impact on the markets. As you can see, the previous reading was 0.6%. On the monthly basis, the forecast is 0.7%, so slight increase on the monthly basis, but this is not the greatest improve on the retail sales, and I think that the United States, as the rest of the world, basically is still coping with the pandemic situation, so basically the retail sales might be a little bit lower than expected for some time. Capacity utilization and industrial production, as you can see here, those are data that has a medium impact on the financial markets, so we are not going to dive into this too very deeply. As you can see, there are some speeches as well. There is a speech from the FOMC member John Williams at 3:45, and then as you can see, we got the last data to be released that has some kind of a medium influence on market, which is Michigan Consumer Sentiment Index. As you can see, the last reading was 80.4, this time is 80.2, so the sentiment is not really improving and not really decreasing as well, so we will see how much they will miss this kind of forecast. 4 p.m. Michigan Consumer Sentiment Index. So basically this is the whole event calendar for today. Just one really important event, retail sales, 2:30, the rest is only medium impact. So the Friday, it looks a little bit, like a non-event day except the retail sales, so we will see how this data will influence the market. Let's take a look at the first technical analysis chart. We have here the Australian dollar and versus the American dollar that I've been analyzing yesterday and 2 days ago. The most important thing was that we have a breakout above 50% of the Fibonacci retracement. We almost hit 61, and then we got this pattern that lead us to the test of this short-term trend line, and then we got the breakout. The breakout occurred on the 15th of October, so it was yesterday. As you can see, we got brand new low. Low was made at the level of 0.7057. This is below this low from the 7th of October, because this low was made on 1797, so it's a 40 pips lower. And as you can see, for today we have another red candle. So the Australian dollar is following the path and following our analysis. The next target is seen at the level of 0.7006. So far, no indication of a short-term downtrend reversal, and it looks like this three-wave move up was just a correction of a larger decline. So New Zealand dollar versus American dollar. Let's see what we got here. As you can see, I have my arrows here as well. We got this head and shoulders pattern, as you can see, to be built, and right now we are still making the left shoulder. The right is done, head is done, left shoulder is being made. We got the trend line here. We can just there you go. We can make it in let's say black color. Okay, so we got the trend line here. The orange line is a neckline. So any breakout below the neckline will immediately expose the level of 0.6375 to test. So this is another nice level to act as a target for the bears. But first we need to break below this short-term black trend line. Here we got very big candle, down candle, red candle yesterday. Today we are just trading around the level of 0.6590. But if we break below the yesterday's low, the low was made of 0.6573, then the chances for the breakout are higher, and then we will of course most likely hit the level of 0.6543 and then the neckline. So the New Zealand dollar and Australian dollar are following our path of the least resistance, which is of course down path, the down move, and they look like they are going to continue the move to the downside. So let's take a look at something different, maybe gold. Let's take a look at our gold analysis. As you can see here, we got this trend line here, which is like a short-term trend line, just 2 months old, and we got this breakout here made on the 9th of October. Then we have a local high at 1934. We pulled back towards the trend line here. We closed below the trend line, so we tested it, but it was just a very deep retracement, let me say, because we have closed this red candle below the Marubozu candle here. As you can see here, we got the low at the level of 1893, and we closed this one at 1886, so $5 lower. And during the last 2 days we got some slight bounce, but still no new highs has been made. So that's our first observation. The local lows, as you can see, 1883 must be violated in order for the price of the gold to go lower towards 1865 and 1848. If bulls do not have momentum, are not strong enough to rally higher towards 1974, okay, that means this was a false breakout above the trend line, and if we will break below 1883, the bearish pressure will be much more visible and we can get even lower. As you can see, we are right now at the level of 49.61, so basically on the neutral level of 50 points. So the market is on the side, but generally this might be considered, this move here might be considered as a false breakout. So we will see how it will go today. Let's just take a look at the US dollar to Canadian dollar. I think I have my analysis here as well. So what do we have here? Again, we have a bearish sandwich made just at the level of this short-term trend line. We have a breakout, 3 red soldiers. The support at 1.3142 has been violated. We got the new low. The new low was made of 1.31, and then as you can see, for the last 3 days we have a slight pullback, slight correction. Let's see where this pullback goes. Let's see how much have we retraced already. As you can see, we have retraced 50% of this last wave down. So the level of 1.3260 is our next important level. So any violation of 1.3260 will lead to the test of 1.3298, but we shouldn't get above this level if we want to continue down. Okay, and any violation of 61% will likely resume the move. We'll likely resume the move up, of course, but we'll likely test the trend line from the below. Right, so please be careful and keep an eye on this retracement levels, because they seem to be very important for the Canadian dollar market. And let's say we are going to do, of course, the euro dollar. Let's just take a look at the euro dollar. As you can see, the market has chosen to move lower. So our analysis indicating the breakout below the black trend line and the test of the level of 1.6096, it was perfect. So right now this scenario has been invalidated and we are following the red scenario, the declining scenario. The next target is around the level of 1.1679. so if we will break again below this red dashed line, then we will most likely continue this move lower towards 1.16.13. So this is our target for today. As you can see, the weekend negative momentum supports the short-term bearish outlook for the euro dollar. And let's just take a look at, of course, cable. What is going on cable? As you can see, we got the touch over 50% of the Fibonacci retracement. So it was made on the 12th of the October 2020. Let me just move it lower. There you go. We got kind of a bearish sandwich made here, and yesterday we have completely engulfed this green candle here. I mean the body of the green candle, and today we are trading near the lows. We are already below the yesterday low. So if we will violate the low of the 1.2862, then we will most likely go to 1.2833, which is the local technical support. And as you can see, the RSI is already breaking to the downside, 46 points only, and it's pointing down. So if we will break below this 1.2849 support, then most likely the bearish pressure will continue to push the prices lower towards ultimately 1.2676 next week. So right now this is our major move. This is impulsive move down. This is only a corrective bounce towards 50% of the retracement, and now it looks like we are about to continue the move down on the pound. So this was my review of the weekly analysis, and of course, I took this analysis during the all of the day of the week. So I think it's a good idea to do some resume at the end of the trading week for you guys. So thank you very much for watching this. I will return on Monday with a fresh new analysis for the new trading week. So have a nice weekend and see you guys on Monday. Take care. Bye bye.